We think demand is challenged in some product sets. In some product sets appears to stabilize. In other product sets, I think it is challenged. I think inventory is building. I think pricing is starting to get a little more aggressive. So we're concerned on some of the calls for hockey stick growth in the second half of the year.
Ruben, are you taking the other side?
I am. We're a little more constructive on the space and hold, Kevin. We think that semis, which have recovered quite nicely after a pretty sharp downturn in December, came out and gave us earnings and guidance, at least for the near term, that are reasonable in our view. And across a lot of the analog semiconductor space, we think that expectations for the year are reasonable. I understand that there are some areas that are calling for a sharper recovery in the second half, but I think in general, a lot of the names that we're looking at do have reasonable assumptions built into the models for the second half of the year. And we are getting some evidence right now that things are starting to stabilize in some markets like handsets. And there are some signs that we could see some growth coming second half in important markets like data center. And of course, things like 5G infrastructure getting built out. So generally, we think that the setup looks pretty good as we head into the second quarter of the year.
Ruben, are you concerned about the valuations following the bounce from December's lows?
That's another good part. A lot of the semiconductor companies that we follow, especially on the analog side and looking at some of the RF names that will be selling into 5G infrastructure, are still trading at reasonable valuations. So lower than the group, lower than the S&P, and we think that's a pretty good setup from a risk to reward profile, again, as you look into the second half and potentially some recovery coming.
Kevin, how do you think about the product cycle this year and what we're expecting as a driver versus some of the previous years?
Sure. When you look across the product sets, as Ruben mentioned, handsets, for example, this year we think is a down year on a unit basis. PCs we think are a down year on a unit basis this year. More importantly, in the data center market, where there is a lot of growth expected second half of the year, sharp recovery in spending from the major cloud players. Last year was driven by a pretty strong product cycle from Intel with Skylake. This year, Cascade Lake, we don't think has the same driver for demand in second half of the year. In addition, we think Intel could be pressured by some share loss to AMD. But just when we look at second half of the year and where estimates have gone, and agree with Ruben in the near term, some of the estimates have come down to more reasonable levels. When you look ahead to 4Q and 3Q, there's a number of stocks that are modeled for better than normal seasonal. In 4Q, almost all of them are modeled for better than normal seasonal. So when you look at the product sets, you look at where consensus estimates have gone and how the stocks have reacted, we think it's a poor setup for second half of the year.